It's Labor Day weekend. Are the American workers still getting screwed? What's up, everybody? Welcome aboard to Bubba's Bottom Line. It is our Labor Day show, and of course, Labor Day, a great weekend. We've got baseball heating up. We got the start of college football, and we've got NFL starting this week. So what could be better this time of year than they have all these great events going on at the same time? And of course, we have a setup right now in a situation that, you know, American workers, we're making less money, working harder to make less money over time. And of course, the ability to find these great jobs that we keep hearing that are out there are not available. And I think it's kind of a sad state when we continue to hear how great everything is. We continue to hear the Federal Reserve talk about there is no inflation, but yet workers are making less money than they were making 20 years ago. Okay, they're making they have less benefits than they had 20 years ago. But in the meantime, the costs of everything, especially food and energy, have risen. Now, of course, they don't want to count food and energy because it's too volatile. Well, again, you know, it isn't too volatile for the Starbucks to raise prices so quickly when the price of coffee goes high, but you ever see the price of Starbucks coffee come down? I don't think so. Okay, look, this happens all the time. From gasoline, now gas goes up and down, but if it goes up 10, it's supposed to come down 12, it only comes down 9. Okay, again, this is a scam that's been around forever. And again, listen, you've got them all working together, and again, it comes to a price discovery model. But American workers, we have got not a great situation at this time. Yes, jobs are getting better, and there are some good jobs out there. But if you look at the population over the last 25 years, we've got 48 million more people, but we've only got 1 million more of those quality, higher paying jobs. So all of a sudden, you look at it and you go, well, maybe the wages are not as good. And again, you see, what are you seeing now? You see more homeless on the streets. You see people with less benefits. You see more troubles with health care. You've got all of these things going on because we've now squeezed down the middle class, thanks to the Federal Reserve and their way of doing business. And of course, if you ever read or the book Creature from Jekyll Island, you will get an idea of the conspiracy theory that was written about in that book. And, you know, I think that's why you see guys like Ron Paul want to end the Fed or at least audit the Fed. And I'm in agreement that we need to audit the Fed or end the Fed because, again, their policies are not consistent with what we're trying to do. Their policies benefit the 1%, not the masses. Okay, again, I go back to 2008. They should have let the banks go broke. Okay, yes, it would have caused a run. But what the money should have gone to is to bail out the depositors into the banks and not the bankers themselves. Because right now, they are recreating for the 13th or 14th time the same mess that they always create. Because they have not stopped lending ridiculous money. They have not stopped doing the things that they do. Why? Because they know that the Federal Reserve will be there to bail them out. Okay, now, isn't that a crock? Where is it written that I should be able to be rich, make the most amount of money, and never take any risk in real terms? Where is it written that I want to put out all the small banks so we can just have the big 11 banks throughout the globe and not have competition and true free markets? Okay, that's what you get when you let a Federal Reserve continue to take control of what's happening here. So when I look at the entire situation, I say to you, yeah, things are better. The economy is better, but you don't have the real growth in jobs, and you certainly don't have the real growth in wages, which is not keeping up with real inflation. I don't care about the way that they want to report inflation. I know that my costs of goods and services are higher than they were, and they continue to go up, and they're not going down. But yet I get that sap story, you know, when I listen to the news or whatever, about the facts that, well, no, there is no inflation. Okay, there is no inflation, but I'm paying a lot more, and there's a lot more leaving my pocket than coming in in comparison to 20 years ago. The big story all week was the consumer confidence number. Oh my God, 138% consumer. Do you realize, first of all, the numbers that you get are usually adjusted, half the time BS, okay? But let's say that it's real, okay? The last time consumer confidence was this high was in the year 2000. Do we all remember what happened in the year 2000? That was the start of the internet collapse. Do we remember the second time it was close to this level was in 2007? Do we all remember what happened? Of course you do. Now again, I am not predicting the end of the world. I am not telling the markets are going down tomorrow. What I'm saying to you is very simple, okay? The data that we're getting is beneficial to the 1%, not to the middle class. As Trish Regan on her show Intelligent Reports always like to say, we are in an hourglass economy. The middle class is getting tortured once again. I see we have a lot better retail sales right now, which is great, but we have a lot more people going into hock using that credit card to continue to buy because they think that their jobs are safe. So, remember, in general, we are a by-the-month society, okay? In general, we are concerned of, can we afford it by the month? So that's the mentality that we have. And of course, so the minute we get a few bucks in our pocket, we're out there spending it. So again, is this good? Listen, it's great to have the velocity of money. It's great to have things churning, but we're seeing another buildup to another bubble to another bust. Now, this isn't new, and this isn't being a perma-bear. This is, go back to Tulip Mania and before, okay? You can name all the major collapses. They all have the same bottom line problems, and that's greed and then fear. And right now, you see the equity markets continuing to rally, okay? And why are they rallying? Well, they're really rallying from the retail traders right now. Volumes are extremely low. And so what do we know factually? We know that markets are predisposed to go higher. Okay, why? Because fund money, IRA money, pension money goes into the markets every day, which is fine, which is why we always say that over time, the markets will go up an average of 8% year over year. It happens, and in between those times, there will be some major meltdowns. Not a big deal. We understand that, okay? But when you look at it and you say, right now, the professionals, the insiders, these companies that are buying back their stock, all these other situations, who are the sellers, okay? Because remember, anytime something trades, there has to be a buyer and there has to be a seller. The sellers right now are the insiders, okay? The sellers right now are the big banks. The sellers right now are those who understand that we have probably reached a certain point in this market that there will probably be a little bit of selling, okay? You have banks maybe not upfront lending money easily, okay, because they don't like the spread, but through the back door, they are buying a lot of these loans from these peer-to-peer lenders. They're buying a lot of these loans from these smaller lenders that are higher rate, not usury, because that's not the right word, but lenders that you pay higher rates to, okay? And I know that part for a fact, okay? So they're buying this bad paper, okay? And now we've gotten back into very little skin in the game when you buy a house. So now you can buy a house for 3%. The way that they're qualifying the loans again is another problem. So you've got this big, massive debt bubble building up, which nobody seems to care about, okay? Now, you tie it by itself, it could probably be resolved, okay? But if you look at it from the standpoint of what's going on globally now, okay, because we are a global economy, with the emerging markets collapsing and with the currencies collapsing in a lot of these emerging markets, remember, when they borrow U.S. funds, they have to pay back in U.S. dollars. At the time, the U.S. dollar was extremely weak. Now the dollar is very strong. So what's happened to a lot of these loans to a lot of these nations, these emerging markets, is they've inverted, okay? So even though they think they're getting back what they're getting, they're actually now losing money. So you can see the stronger the dollar gets, the more these emerging markets collapse. Tie into the fact that you've got the trade wars going on, which I will say before I talk about it, that they will be resolved because, again, we do hold all the trump cards. That's a given. Okay, so anybody can fight as long as they want, but they will never win the battle that if we continue to hold out. Okay, so that's one thing. But you've got the collapsing yuan or the renminbi in China. You've got the collapsing stock market in China, and they're not an emerging market. They're not a third world nation. They're the second biggest economy in the world. Okay, only the fact is that we're 5 or 6 times bigger than they are. So you look at all these phony numbers that we have out here, and all of a sudden you don't think that eventually it's going to come back to roost. You know, you look at the amount of debt that is being created. Okay, auto loan, student loan, housing, all of it. Okay, record debts. The debts are significantly higher than they were in the last time we crashed. So again, and I'm not predicting a crash tomorrow. Okay, again, the markets don't announce this. They don't tell me. I don't get a telegram when they're going to collapse. And I am not predicting that they're going to collapse today. They will collapse again, and they will rally back in, but they will collapse again, but they're not going to they don't announce themselves. Markets do not announce their intentions. But when you start to see some dramatic changes throughout the cycle of the markets, okay, and now as I'm saying, you're seeing it's the retailers buying them. We're seeing moves in the NASDAQ right now. We're seeing these big gaps all over the place. I mean, and there's nothing wrong with a stock like Apple going up $4 or $5 a day, but when it's already made new highs and continues to gap up 2, 3, 4% a day, that's a little bit frightening. We're getting back into the same old mode that we always get into, which is, oh, this time is different. It doesn't matter, okay? Well, I beg to differ. It does matter, and it may not matter today. It may not matter tomorrow. But you can bet your sweet potatoes that it will matter. And there will be something to pay for all this when it does happen. In the meantime, I'm going to step out here for a break. This is Bubba's Bottom Line, Todd Bubba Horwitz, and we'll be back with more of Bubba's Bottom Line after the break. If you're interested, on Tuesday, I'm redoing the hedging webinar. I was asked to do this for another company, so I'm going to do another hedging webinar because I've got a class starting a week from Tuesday. If you're interested and you want to see it, do me a favor. Just send me an email at bubba@bubbatrading.com. I'll send you a link. You can register. It's free. Okay. Don't forget about our high school investing program. You can help us out at Patreon, patreon.com/Bubba Trading. And of course, don't forget to catch the Bubba Show every day from 4 to 5 Eastern at libertytalk.fm. Now let's get back to the show. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you. And of course, last week we made new highs pretty much on a regular basis, and that is the pattern right now. Okay, we're not fighting that. We're not disputing the fact that the markets want to go higher. Okay, again, if you look at the markets right now as a boxer, right, you've got the heavyweight champ and you've got the amateurs. Okay, you've got the contenders. Okay, and the heavyweight champ right now wants to make a good show. Okay, so he wants to hold things up a little bit. So they're not in there selling heavily. They're allowing the retail trade to jump in and buy more, okay, and buy more and buy more. And of course, you see this. In fact, I texted out on Thursday and Friday when we were down significantly. I said, don't be surprised if they rally back. Okay, again, this is the kind of market you're seeing. Everybody wants to. You're seeing, in my opinion, the final dollars flowing in. Now, how long can that take? I have no idea. Okay, and again, I'm not predicting it. I'm saying what I say almost every day for the last couple of months. You want to observe the market. You want to look for opportunity. Wherever you find it, you can take either side of the market right now because we're not going to predict that it's over. We are still watching for a dollar that's going to get close to par, and we're looking for 10-year notes at 3.5%. So I think we'll see both of those this year. And I would, if I were to predict, and this is not like I'm guaranteeing or I'm going to play it this way yet, but I would predict in October we see a major serious sell-off. That's a typical time of year. If it's going to happen, it's going to happen probably then. We'll see how it plays out. Again, we're just in September, so we'll see. And again, I'm not making it. I do not sell any of your assets based on this conversation. This is theory. This is what I've seen over years. Besides the fact that I hedge everything, I never sell them anyway. So that's another story. But we had the NASDAQ is going bananas again. Okay, we thought 7,900 or 8,000 would hold. Well, we're like at 8,200. They continue to fly up. And there's no stopping it, okay? You can bet that this week, most likely, Amazon will hit $1 trillion as well. So we'll have 2 $1 trillion companies. You had oil had another up week, so they had 7 weeks down, 2 weeks up. pressing right up against the upper end where we could have to see some pukage. We might have to get the airplane sick bags again, but I think we're going to be okay here. I think that this is part of the rally, so it's all cool. You have the grain markets were under pressure all week long, okay? And I kept saying, if you remember on the updates, I kept saying there's something wrong with the trade. We're not seeing the kind of action you would expect to see. Well, all of a sudden, Mexico came on board, which was fine. Canada has not come on board yet, but the grains found it in their heart to rally on Friday, and it was a nice rally to actually push wheat and corn to not high streak, but up on the week, and soybeans cut their losses significantly. I think, as I've said all along, I think the bottoms are in. I'm a buyer. I'm looking for opportunity. I think they continue to work their way higher. I think that, again, I do believe the trade wars are going to settle. I don't really believe they have that much of an effect, so we'll look for that. The meats, very mixed. I think the interesting of the meats was hogs this week because they opened up and spiked up a couple times and couldn't really hold it. They actually made a low, but they made a higher low. So we're pretty bullish the ag spot stuff all the way across the board, okay? Gold did a nice job of holding in that support range. It held, made more of like a new low at 1190, 1195, so we like that. I don't think it's going to break out. I would love to see gold consolidate a little bit longer, not in a hurry. Again, I don't want it to jump up here. I'd like to see it consolidate before breaking out. And of course, the dollar held support, popped up nicely, looks really solid. So again, everything is kind of playing the way that we looked at it and the way that we expected to go, so that looks solid. Cryptocurrencies had a nice rally last week, and we're starting to see a bounce. And of course, when you look at now a lot of the crashing currencies around the globe, the lira, the real, and some of the others that are crashing, okay, yet the Bitcoins are still starting to rally. You know, Bitcoin and cryptocurrency world, they continue to rally. So I think that looks pretty solid. I think that bodes well and gives a good case. And if you take into consideration how much trouble that the cryptos are getting from the SEC of trying to get some ETFs going, which I don't know why they're so dead set. I guess they're just trying to figure out how they can get their money out of it. But again, that looks really solid as well. And again, I will repeat, I am down money personally, but I am still investing in, okay? Losing money, but still investing in. Again, not a lot of money, just enough to, we'll call it dinner and a movie every week, okay? That's what I think. But I think one of the things we're seeing here is, the American dream, I think, is shrinking. I think, again, this goes back to how we opened the show with jobs, wages, inflation. People are not making enough to really go to that next step. We've got nowhere to save it. You've got to be forced into the equity markets, okay? And most are not in the equity markets. A lot are in through individual funds, but, funds do not act like Apples or Amazons and stocks like that. They do go up, but they don't go up at that kind of rate. But I think that's an issue that we are looking at right here, and I think that becomes, something that's somewhat of a problem. Okay, I think that you look now at the overall pundits trying to speak out. I heard somebody talking about copper. Okay, now copper is a great bellwether that is used to kind of gauge the strength of economies in the markets. Obviously, copper used in all the buildings, housing, and so on. And of course, in China, copper was used and is still used as a lending base. Okay, they use that as collateral when they're borrowing money. Yet somebody had the temerity to say, okay, that this time is different. Okay, it doesn't matter that copper is getting creamed and it's going down. It doesn't signal a lack of growth. Well, I guess maybe we've switched to houses of cards, so we don't have to worry about using copper anymore. Okay, again, these are all warning signs out there, and none of them should fear you. Okay, you should be afraid of none. What you should be thinking about is your own personal emotions and controlling those emotions and learning to be patient before you make a major move in one direction or the other. And that's one of the things we always like to talk about is how to be patient in a market, okay, and not be in a hurry. The fear of missing out traps many, okay? The fear of failure, the fear of going broke traps the rest. If you can learn the couple of things that are very important to all traders and all investors. Never worry, have the fear of missing out, because you will not miss out if you play it correctly. Okay, you may miss the first leg of it, but if you play it correctly, you will not miss out. You will get in at probably a better time if you're doing your job. Okay, don't have the fear of failure. Again, I tell everybody this. If you happen to be in a stock or in the markets, and let's say you're long and the markets are falling apart for a day on an opening, and we can go back about 2 years, August 24th of 2015, the markets were sinking, we're having a flash crash, and I kept telling everybody, relax, take a deep breath before you make that final decision. And I'm telling you, okay, before you chase the market up, take a deep breath, look at it and make sure that's what you want to do. And before you puke it out, take a deep breath and make sure that's what you want to do. Because typically, if it's going straight up, there will be a pullback that will give you a better opportunity to buy. And if there's a big sell-off happening, there'll probably be a rally, give you a better chance to get out if that's truly what you want to do, if you want to be out of the market. And I think that's something that is important. But other warning signs, Illinois, the state of Illinois, what a wonderful state. What the biggest, the worst ever, okay? Anyways, pensions are broke, and the pension debt is at a record. Isn't that great? I'm sure all the Illinois workers are thrilled to hear what I just told you, okay? Now, where will the next crisis come from? Well, where will it come from is obvious. It'll come from debt. It will come from money, because at the end of it, it's about the money, okay? The only question is when. This is not an if it will happen. It is going to happen, and that is not a negative on America. It's not a negative on anything other than the fact that you get to certain extremes, okay? And right now everybody's telling us this is not an extreme. I think it was the same people telling us that we didn't have to make money in the 90s, that companies didn't have to make money anymore. I think what you're seeing is, between the high consumer confidence and everything else, that we're just getting to a level. Now again, the next crisis will be, in my opinion, the black swan will be interest rates and the dollar. We'll see how it plays out. Again, I would still be an investor, okay? That goes back to being able to hedge and do everything else, but we're still investors. We're not getting out of the market, okay? We just want to understand that maybe this isn't the best time to be committing new money. I don't want to sell. I don't want to try to rotate. I want to sit tight, okay? But I think the world is showing, okay, of some of the things that are possibly happening, because, when you get markets that go basically straight up, which they have, we've had some little sells, so basically straight up, and nobody cares, okay? We don't care about news. And I personally never care about news. I don't even care. I don't even use the news, nor do I even listen to it half the time, unless I'm going to be on. But the point is that you look at all the bad events that have occurred over the last few years, and not even a budge to the markets. So all that says to you is that everybody knows the markets can never go down again. We can never go down again. So if you have that in your mind, this is an emotional thing, right? We just talked about it. Think about it. And my advice to you, okay, as a faithful listener and watcher, is before you do anything that is drastic, take a deep breath, think about it, look at it, make sure that's what you want to do. Because my favorite example is, we have all done this, or at least I have, said something to somebody that the minute those words came out of your mouth, you wish you could put them back in, but it was too late, and the offense was over. You take the loss, or you chase the market up, it's too late once you've done it. So take a deep breath and think about it. We're going to step out here for a break and come back with my commentary after the break on Bubba's Bottom Line. This is Todd Bubba Horwitz, Bubba's Bottom Line, and we will be right back with more. Anyways, everybody, hedging webinar on Tuesday. If you would like to come, email me at bubba@bubbatrading.com, and I'll send you a link, or you can go to bubbatrading.com. It'll be there posted for you. Also, you want to make sure you help us with our high school investing program. That's at Patreon, patreon.com/Bubba Trading. And of course, don't forget to catch the Bubba Show every day from 4 to 5 Eastern at libertytalk.fm. And now let's get back to Bubba's Bottom Line and my commentary. Welcome back to Bubba's Bottom Line, Todd Bubba Horwitz. And of course, we always, the easy the easy picking on is always the Fed, but the unconventional money or monetary policy, we all just think that money is going to continue and it's going to grow, and there's not really a concern. There's not a concern that we were in debt $6 trillion in 2000, and in 2018 it's 21 trillion. That the debt service was 500,000 in 2000, and it's only 625 billion today, which means that that's probably going to get out of whack at some point, which will be an explosion. It doesn't matter that these policies and the Fed is letting it get away from them and refusing to let free markets and price discovery allow them to raise rates, okay, because they should be raising rates because of all the outside lending that's going on at much higher rates. And in fact, the banks, as we talked about earlier, are buying a lot of those loans, and they could actually be making more money, but of course they don't care because they've got the Federal Reserve to bail them out. But the unconventional money always comes back to haunt you, because you cannot manipulate the markets. You cannot borrow your way out of debt. This whole package has really done is it has led the separation, excuse me, has led the separation from the upper 1% to the rest. We are basically going in these directions now, okay? You cannot continue to allow it to happen that way, because what you've created and what the Federal Reserve has created and what the system has created is not a fair and balanced market system because of how the money works, okay? So the overall workings of the Federal Reserve and their unconventional policies and their refusal to let the free markets work, okay, which is really what they're doing. You can say whatever you want, but they are not allowing a true and free price discovery market to work, because if they were, then you would not have a need for all these peer-to-peer lenders, okay? If the Fed was doing their job and everything was being done correctly, and we weren't trying to manipulate currencies with currency wars and trying to work all these things around the back door, okay, while keeping rates down so that we can keep our debt service down, there would be no need for all of these outside services. And not that there's anything wrong with it, because people are making money off it, but the bank wouldn't be making so much bad paper, which they are doing, and that's because it's always different this time. But they know one thing that's never different is the Federal Reserve will be there to pick up the pieces, which is totally against what their whole plan was when they sold this ridiculous bill of goods to the system, okay? And that, to me, brings up the bigger problems. So this unconventional money policy is already causing major currency collapses. It's already causing major emerging markets to fall. It's only going to get worse. And if you don't think that it can get to here, you better think again, okay? Because again, in a global economy, this is like a big Jenga model, okay? One bad piece comes out and down it goes. And again, we're not predicting it, certainly not this week, but we're just letting you know that's kind of the way things are and the way things happen. As always, have a great Labor Day weekend. We thank you for being part of Bubba's Bottom Line. And because we've got a football game Thursday, okay, I'm going to give you a pick today. We like the Atlanta Falcons on Thursday night against the Super Bowl champs, the Philadelphia Eagles. Have a great weekend, everybody. Thank you so much for being a part of the show. We'll see you Tuesday for Bubba's Daily Update, and we'll see you next week for Bubba's Bottom Line. Have a great weekend, everybody. Thank you so much. We'll see you later.